Most trading strategies fail walk-forward analysis. Engine C did, instantly. But Engine B was different, not because it was perfect, but because it survived. This episode shows why. Engine B sits between the long-term stability of Engine A and the high-noise chaos that broke Engine C. Its logic is built for the medium-term horizon, where markets stretch, compress, trend, and snap back in unpredictable cycles. Not too slow, not too fast, just reactive enough to adjust without chasing noise. And in early backtesting, Engine B showed something rare: consistency without curve fitting. An engine that looks smooth in a long backtest can still collapse in real conditions if the logic only works in one type of market. Walk-forward analysis forces Engine B to prove itself under real uncertainty. Expanding volatility, compressing volatility, clean trends, shock reversals, news-driven spikes, low liquidity periods, regime shifts. This is where most strategies fail, but Engine B didn't. In each walk-forward analysis slice, train parameters in sample, freeze them, test on unseen data, move forward, repeat. Engine B showed the same pattern again and again. Not perfect, but persistent. So I'll be starting the first out of sample without changing any parameters from what was optimized from the in sample. That's the first slice, which passed. There's a bit of the trade statistics. Now I'll go ahead and start the next in sample, which would be from 2019 up until 2021. Loading the new optimized params for this period. And now starting the out of sample without changing any of the parameters. Just a bit of the trade statistics there. Starting it now. Still looking really good. So I give that a pass. Trade statistics. And we'll go right ahead with the next in sample, the third slice. B3, which starts at 2020, loading the new params for this period. Looking really strong, but we need to test the out of sample, which is the year right following it, 2023. And in this case, it didn't look that strong. However, it ended with some profit. But this one was not the strongest slice. Now we move into the next, B4. Loading the params once again for the in sample. Looking really good. Trade statistics. But what matters is what happens out of sample. So the following year, 2024. Looks really good. Definitely a pass. Some trade statistics for the out of sample. And now for the bonus slice, which I took the 2 years prior. This is B5, the one that was eventually used for the live. So from 2022 up until 2023, 2 years. Some trade statistics. And then now for the out of sample, which would include this year and the previous year. So from 2024 up until 2025. Now my backtests were first anchored on November 14, but let's just try to use the latest date that we have. Now we're in December the 5th. So we're gonna use that. There we have it. Really good return for the out of sample. Some out of sample windows were strong, some were weaker, but none collapsed, none inverted, none blew up. The logic generalized. The structure held up across completely different environments that had nothing in common. This is what actual robustness looks like. Engine B isn't flawless. It simply does not break when the market changes character. And that's exactly what Walk Forward is designed to reveal. Walk Forward isn't about achieving perfect performance. It's about exposing which ideas are structurally sound and which ones only look good in hindsight. Engine C collapsed immediately. Engine B didn't. And Engine A is the engine that survived the longest, harshest history of all. That's next.